Good morning, everybody. It's Monday, April 7th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Quickly here, overnight markets had May corn down a penny at $4.59 1/4. May soybeans were up a penny and 3/4 at $9.78 3/4. May Chicago wheat was up 7 3/4 at $5.36 3/4. Right now, we've got the outside markets sharply lower. The Dow's down 965. S&P's down 141, and bonds are a little lower as well. Bitcoin's down 7,000. Good morning, guys. Hope everybody had a nice weekend. Welcome back, some of the folks that are joining us again here this morning. Not much happened last week, as you can imagine. So we'll jump right in. Still main on, top thing on everybody's minds here this morning is continued rhetoric out of the White House on tariffs. They're talking about a number of countries that are lining up to visit with this administration. So, we're going to be headline driven pretty sharply here, guys. But Justin, welcome back. I guess let's get a few thoughts here on where your head's at, and we'll throw around the room.
Yeah, thanks, Dan. Well, I left you guys in charge and kind of a shit show. So
we failed.
Pardon my French, but no, obviously a lot of moving parts. I think the big sell-off we saw last night. I mean, we are down sharply, but we're also up sharply from the lows. So I think it's kind of a margin call situation where it's broken so far so fast. Trillions of dollars have been wiped out, of the stock market. So you run into margin calls. I think you're cleaning out, as far as just a trader's perspective. You've got a lot of fear, got a lot of people getting out of stocks, getting on the sidelines, hedge funds, blowing out of positions. So I think you saw that spill over into a lot of markets. I think the action last week, corn and even soybeans to some degree, just kind of holding in there with all this going on. Most notably, corn, I think, was pretty impressive. We'll see where that goes from here. But I mean, we sold it 7, 8, 9 lower multiple days in a row to only close higher and close higher in the week. So I think there's some just value areas that we're getting into some of these commodities. And when you see a giant sell-off like this, we've seen it a number of times where gold's the perfect hedge, or Bitcoin, and then you realize when they all have the same positions on, when you're getting beat up in a trade, you get out of everything. And then when the dust settles, the things that maybe got too cheap or got sold off as an innocent bystander kind of recover. So I think that's a little bit of what you saw in some of the commodities, personally. But again, I wasn't 100%. It was a good week to be out. I think this week's also. I mean, it's just going to be. There's just so much happening, and everyone's trying to get a handle on, what it all means. So.
Yeah, and I mean, to see funds, being net buyers on the week of corn, I thought was pretty positive overall.
Yeah, I mean, nothing, in my mind, obviously the big ones, Mexico, and if some of these, we've had, got a big corn program in Mexico, as everyone knows, and I think the fundamentals in corn are still strong. We got the big acres number out of the way. Now we got to plant it and show a crop and still prove the safrinha crop, all the things that we've talked about. And now you've got a pretty clean, call it, balance sheet as far as fund length. Funds are short most commodities now, outside of corn. Maybe oil, they covered some shorts last week, but and we're going into the growing season, and we're going into this huge uncertainty time frame where we've got, you said it in the intro this morning, but all these countries that there's going to be ton of negotiations going on, and are we pricing in just kind of worst case scenario for a lot of things right now? It's impossible to know, but certainly a ton of fear. There's a ton of fear, and how cheap are we going to go? And a lot of the commentary I did read when I was on vacation was, just it's not if we're going lower, it's just how much lower. How much demand are we going to lose, and all these things. And I still think that's a huge question mark on, we could do deals that improve demand. I mean, we could do huge biofuel. I mean, the rhetoric coming out of the White House on biofuel things I thought was positive. I think that's why soybean oil and maybe corn to that degree too also, recovered last week. I think the notion that we're just going to get rid of all this biofuel infrastructure, I think is misleading. I don't think that makes sense if we're trying to grow energy production by 2x, 3x in the coming like decade. To meet all these demands. I don't think you could do it with just oil. I mean, I think you have to do a lot of these different things that we've already been doing. I think most of the new energy has been, because of the Green New Deal, or it's been windmill, and it's been a lot of solar projects. There's been a lot of the new things, and I think we have to do all of them. So,
Ben, what do you got on your mind?
Yeah, I'm going to agree with Justin that it was a good week not to be in the seat.
Oh, we had fun.
Really violent. You hate to see soybeans take it on the chin like that, just when they were kind of getting something constructive going with a fairly low acreage number. But so much narrative out there driven by social media, and you see people that the loudest or most consistent voices are the ones that are at the far end of each political spectrum. And I think people are going to make themselves crazy trying to figure out what the net outcome of this, and everyone waiting for the next tweet to see did we make some progress? Did we make some resolution? And my guess is it's going to come in little chunks and bites here and there, because we have multiple trade partners that we have put this against. And I agree. I had a conversation with a friend of mine. This guy's a brilliant lawyer, and he's on the far left of the political spectrum. And he wanted to say, well, we'll see what you think of this when soybeans are rotting in bins. And I thought, you don't know anything about soybeans. You're a brilliant lawyer, and now you're going to educate me on grain trade. And I think that's a real microcosm of what we see going on. Everyone's got an idea that this is either super bad or it's super needed. And ultimately, I think we'll figure some of it out, and grains will stand on their own merits at some point. And I think, other than some kind of harsh panic selling in beans, we saw that in corn and wheat. And if you go back and look at, we mentioned 6 months ago when we were talking about the possibility of getting the situation that this time is a little bit different. There is no ASF in China as far as we know today. And I think for it to be really punitive, we have some time to work it out, unless we start seeing some cancellations for what's left on the books. But we'll see. If you think the equity markets were just going to go straight up, then good luck in your fairy tale land. There's no money trees out here. So I think grains can stand on their own here. We need to keep an eye on what Mexico weather looks like. They've been a big savior for us this year, following 2 years of poor crops down there, and see where we go in the U.S. Ultimately, we need to develop more domestic demand, to Justin's point. That's where we really need to be focused on, because they're not going to quit growing crops in South America.
Yeah, and I just want to add to that too. I do think if you look at, part of the panic has been, oh my goodness, we're attacking Mexico and Canada as well. And I do think there's going to be some really, deals made there. I don't think that's a long-term strategic plan that we want to be fighting these partners. I think it's just kind of rebound. I think it's setting the bar high and then trying to find a middle ground. I think strategically we need Mexico and Canada to be strong allies for a lot of reasons. So I think, everybody in every industry is having these kind of conversations. Like we're looking at our ag bubble here, but everyone's trying to figure out what, every industry right now, trying to figure out how, because we're so connected to so many different countries on imports and all these things. And the question, I think the big one is going to be, okay, if we want to do all these things, we really can't do them in a year or 6 months. Like if we get enough commitments and we cut these deals, these strategic 5 or 10 year commitments, like how long does that take to do?
Yeah.
Because I think you can't just, all of a sudden bring all manufacturing that you've lost for 40 years back to the U.S. I mean, you don't have the people or resources to do it in a short amount of time. So,
Well, and you're going to be bumping into midterm cycles, and there's a political aspect to this that I think is you can't go undiscussed, right? I mean, you can have an American first agenda that could switch pretty quick after the midterms. And so like, if you're a big corporation, you have to balance, like, do I go make this radical change, to your point, Justin, or do I kind of like, we're going to hunker down and we're going to see if this guy loses in 6 to 8 months, and now we can go back to status quo. I mean, that's a real question.
it's to Ben's point, social media, everybody drives this just fear on both sides, like very, very bad, and gets people really riled up. And to the point where you see people that I've known for a long time that have grown up in factories and lost multiple jobs and had to move families that are, protesting now because their 401k was down last week.
Right.
Like, you know what I mean? They're just so worked up on just something, you would think that would be a person that would be super happy about bringing jobs back in factories. They're a lifelong union, multiple, like I said, have to move multiple states and are mad about the 401k now. So I think it's just a lot of people are riled up. Hopefully, calmer heads prevail and we'll figure out some solutions here. But
well, and we mentioned a couple of weeks ago too about the amount of money that's on the sidelines, and today there's more money on the sidelines than there was 2 or 3 weeks ago, probably by a long shot. So if you can give someone a story or an inkling, and some of this money is chasing returns, we could get some really good volatility in the grain markets, over the next 2, 3, 4 months as we move into our growing season. So we discussed a lot of times the disproportionate kind of ratios of equities to commodities, and maybe there's some room here to see that shift back a little bit. I know that the old saying of a rising tide lifts all boats, but and it can sink all boats, but there is unquestionably more money on the sidelines today than there was a week or 2 ago.
Justin,
too early to worry about the flooding in the Mid-South? It's a pretty bad deal.
Not if you're there.
Right.
Will the markets care? I mean, we're April 7th. Yeah. I mean, so we'll start to care, the next couple of weeks for sure. I'd say, it's probably too early, but not for those folks. I think there's some legitimate problems. But you know how it goes. I mean, things can change quick, and I don't think there's obviously that's, I think, kind of on the back burner of anything the market's going to care about right now. But
very good. Well, quickly here, Ryland, $9 break in fats and 13 in feeders. Interestingly enough, you still got a really big fund position, so that's kind of on the forefront of everybody's mind. And then, backside of Friday, we spent most of the day limit down in hogs. So I guess start us off with some of your thoughts going into the week.
Yeah, well, I mean, obviously the fear is going to be pretty high going into today in the meats in general. We've got expanded limits in all markets. So feeder limits are $12.25 today. Live cattle limits are $9.75 today, and hogs are $6. So, I mean, in that kind of a breaking environment, a lot of fear, a lot of uncertainty. I mean, we really didn't see, I thought, as much liquidation as I kind of expected, especially in something like the feeder market. It just, open interest wasn't hit that hard. I mean, feeder interest was down, 1,780 contracts. And I think the big change in OI in the live cattle market, at least 13,000, almost 13,500 contracts. A lot of that probably had to do with the fact that it was option expiration and you have first notice day for April today. So, I mean, I think the market's probably going to start maybe paying attention a little bit more to some of the fundamental aspects. I mean, cash trade was $2 to $3 lower in the South at 208. In the North, it was 210 to 213. So obviously it's a futures-led break in cash, but we didn't really see a big change in beef. So there's still business being conducted here as usual. I think you've just got a lot of the sentiment that's kind of pervasive amongst all these markets right now, which is just kind of a, hey, get me out, I don't know what's going to happen kind of situation. But, so just overall, I think there's a big expectation for that fear to kind of last into today, but eventually the dust will kind of settle. I mean, I don't know when, but obviously, we just hadn't seen a heavy amount of liquidation into this time frame, and now we're starting to see it, especially with these kind of limits. So we'll see what happens today, but there's definitely going to be a lot of volatility here, I think, just all week, with waiting to see what happens with trade deals, tariff rates, if those are negotiable or not. So, it's still kind of a wait and see market.
Very good. Appreciate the update as we open here. You got April feeders down 567 here. Fats are down about 320 across the board, and hogs for June are down 215. Grain markets, May corn down 2 1/4, 458. May soybeans are up a half, 977 1/2. May Chicago wheat is up 9 at 538 1/4, and the Dow's down 1200. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe to keep you up to speed on everything that's going on with AgYield. And again, thanks to everybody that supports the show. We're doing this live every day that the markets are open at 8:15 Central Time on X, Facebook Live, and YouTube Live. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day. We'll look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.